item E, the approval for underwriting firm of 2022 ban refinancing. Ms. Ayers, if you'd like to.
Thank you, sir. We've been having some ongoing discussions about the township debt and how that is refinanced annually. At the last meeting, we discussed effectively starting that renewal process. This is the next part of that, working with the underwriting firm and getting that in place to get the band refinancing together. Andrew Brossart is here. I've been waiting patiently in the audience. I asked him to come. I would ask Andy to be here this evening to discuss a little bit about where we are in the process. This bid process to get to Stifel as the underwriter, and then if you have any questions on the process for refinancing, I think Mr. Brossart would be able to handle those at this time.
Good evening. Andy Brossart with Bradley Payne Advisors. We've been the municipal advisor to the township for many years. So our job is to help you guide you through the process of the note renewal. We don't have a financial interest in the actual financing side of it, but we help guide you through that process. So right now, the application is before the OMAP program, which is a state treasurer's program that gets you a lower interest rate. They guarantee the notes if there's not a renewal next year. And so that helps out with the interest rate and the borrowing cost. Every year we go through this process with underwriters, and underwriters are the entity that sell the notes out into the public. This would probably be mostly, even $21.4 million would be one buyer. And so the process we take with that is we go to the top 5 note underwriters in the state of Ohio, ask them to give us a bid on their fee, and then tell us what their spread is going to be in terms of the interest rate. And so both items, the interest rate and the fee, ends up being the low bidder, and this year is Stifel Nicholas. I believe this might be the first year we've worked with them. They are a very large organization in St. Louis. They're massive across the country in terms of municipal underwriting, very good firm. And so that's the recommendation for moving forward with them tonight. The note issue will probably price middle of August because the 2021 notes come due, I believe, August 30th of the month. That's a short synopsis of the process. Interest rates are up. We're looking at in the range of 2.5% this year for a 1-year note borrowing cost.
Okay. Well, thank you, Ms. Ayers. Thanks for inviting Andrew out here tonight. It's a pleasure to meet you.
You too.
So thank you for the support of the township and what you bring to the table. John, I'm sure John does.
Oh, I do.
He's met with him. You've met in depth, right? Yeah.
I would expect nothing else.
That's funny.
Yeah, you and I, we met, I don't know, it was back in February or March or something.
Yeah.
Sat in the conference room with Mr. Wright and Mr. Campbell. And from my perspective, it was a great meeting. You're, keeping it high level, helping me to understand what this bond was all about. If I'm remembering correctly, it was a derivative where it's an interest rate swap with the Royal Bank of Canada. We had or I guess the current interest rate is 3.9%. So is that dropping to 2.5? Is that correct?
Yeah, so you're always paying the 3.49%.
3.49?
Yeah, don't quote me on that. I haven't looked at that in a while, but whatever that rate is, I think it's in that 3.4 range. So you're always paying on that. Now, the 1-year note is tied to a match of what the 1-year note of the 1-year short-term rate is. They call it it used to be the MIG, or I'm sorry, they just changed the name of it. Anyhow, there's a mismatch there that has to be accounted for.
Is that true up?
What's that?
The true up?
The true up, that's correct. So that 2.5% rate would be matched up to the SIFMA rate, which is what they used to call it, 1-year borrowing rate, and if those match up, it's either a gain or a loss. So the gain would be you don't have to pay anything more. The loss would you have to pay more in interest that year. Now, I think going back the last 5 years, I believe, the townships had the benefit of the mismatch, if you will. So that's what happens below it. It's a very complicated instrument. It fixed this financing for you for a period of about, I think, 25 years into that rate. But the downside of it is that you have to renew the note each year.
Yeah, so also something we talked about was, my concerns and my original understanding that it was a short-term note, but kind of really isn't. But we still have to renew it every year. And with interest rates going up, and at that time, we were talking about that, and you told me to keep my eye on LIBOR.
Yeah.
Well, I've been keeping track of LIBOR rates. So when we first talked about it in the March meeting, so maybe we actually met in February or early March, LIBOR was 1.38, then it went to 2.28 in April, then 2.67, then a 3.01, and I think yesterday's rate was 3.72. And my takeaway from that meeting when you and I discussed it was as long as the LIBOR doesn't go greater than 3.9, and again, it's a 3.72,
Yeah.
at that point, I think your words were, we might have some decisions to make. So LIBOR being in the ballpark of this 3.9 or 4.9, whatever it is, what problem do we have, or what problem are we going to have, or is this even a problem?
Not a problem. Because that rate is locked in for so long, you could do nothing and continue to pay that 3% rate until maturity on the notes. Or should I say the long-term swap through a derivative product. Getting into the weeds of this, when rates were really low, I don't know, when they were 20 basis points for LIBOR, there was this huge breakage fee. So if you called up RBC and said, hey, we're done with this, we want out, what was the number one time? It was like, I think, $6 million was the breakage fee, just to get out of the deal. And so, you know, that wasn't good for you, obviously. Now, as interest rates go up and LIBOR goes up above the swap rate, that's when we've seen that breakage fee decrease and decrease over time. And so as we come closer to this renewal, you'll get a statement from RBC that says, hey, this is the value of the breakage fee today. And so we'll have that answer for us as we come closer to repricing this note each year.
Yeah, I don't know that we want to break it, we just good to know what our
Yeah,
options
I mean,
are, what our
it's-
future looks like.
You know, it's, you break it, now what's your option? Do you roll a note again and then you're subject to whatever interest rate market may be in the future? That's a gamble. Do you fix it in the long-term bonds traditionally the way a community would do? You know, then you're looking at whatever the interest rate market is at that time.
So,
But you're not renewing the note every year.
all right, so let's fast forward to a year from now, and we're having this conversation again, and they say LIBOR is at, I don't know, 6%, just to throw out a number. How does any of this change at that point, or does it?
Well, you're still paying the 3.5.
And we can pay that till the end of time, or till the bond matures.
That's correct.
Awesome. I like the sound of that.
Well,
Thank you, I feel much better.
I wasn't here when this was done, so we've been helping you out through it all the way through. It's a complicated product. You don't often see it in the township structure. You see it a lot with universities, healthcare, you know, talking mega, large transactions. It's worked out for you, you know, but, you know, there are some risks associated with it. The other risk is the credit risk side of this relative to your swap provider. The RBC's got a really good credit rating. And so that's the other concern that you'd be worried about. And this happened back in 2012 when there was a lot of swaps out there with banks that went under. And then all of a sudden, if you were holding that swap, your derivative package, you had to pay up. And a lot of people didn't know that at the time, which really pushed this product into a very heavily regulated product now, that anytime we even touch that swap, we're required to get a swap advisor involved who's an expert in the field that is looking on your behalf.
Great.
And I've
Thank
had
you.
some ongoing conversations with Mr. Brossart. We continue to evaluate what we think the best way to move forward is, and definitely keep an eye on whether we think this continues to be the best product for the township or whether we want to look at different options.
Yeah.
But that's a constant conversation.
Great, thank you.
Just want to say, being real, they always say you never want to be the smartest person in the room, and clearly I am not the smartest person in the room. And that was like a completely different language, so. Appreciate you
You're
having you
welcome.
on our team, so.
Thanks.
Yeah,
It was a pleasure
absolutely.
working with you guys. Any
Thank you,
questions?
sir.
No, absolutely, thank you.
Okay.
And again, happy to hear you reiterate the OMAP process. We had Treasurer Sprague in town in January for
Oh,
a
did he?
formal visit to
Yeah.
Union Township, and Ron Campbell and I sat down and talked with him about that and the OMAP and being able to leverage the credit rating of the balance sheet of Ohio, so.
We talked about it
Great.
3 years ago. It was a great product to move into. Yep.
Yep, so
Thank you.
great. So thank you very much.
Thank you, sir.
Gentlemen, do we have a motion to approve the underwriting firm for 2022 band refinancing?
So moved?
Second.
No discussion. Roll call, Mr. Campbell.
Mr. Dills?
Yes.
Mr. Becker?
Yes.
Mr. Logue?
Yes.
Motion carries.